that basically concludes our session. But we've got a few resources here, and then we'll walk through. We'll both open up the lines and we'll walk through some questions. Did you have anything else you did want to cover off beforehand?
Only things like superannuation.
We didn't talk about that, did we?
And family trust. So if you've got superannuation, don't assume that'll always be paid to your estate. The trustee of your super fund holds that member balance on your behalf as the member, and has a discretion to determine where that's paid in the absence of a binding nomination. So again, don't forget your super when you come to make your will, because often you'll have a lot of money in your super with life insurance and whatnot. Same with your family trust. Don't assume you can give away those assets. You'll need to deal with the succession clauses in your trust deed when you come to do your estate plan. So
that's really just emphasising the fact that you need to consider the non-estate assets.
Correct.
Which are typically a family trust, I guess a home that's owned jointly
with another,
and superannuation.
Correct.
If you want to specify to your superannuation fund and Christian Super, for example, exactly where you want it to go, you can set up a binding nomination which is valid for 3 years.
Correct.
And that form is available by calling the help desk. So I've got the numbers up here, so 1300 360 907, and they can either email out or send out a binding death nomination there for you.
And a binding nomination just removes trustee discretion, which in some cases is very valuable. But
have you seen scenarios where it's not particularly valuable?
Look, if you problematic. The absence of, certainly, if someone's wanting to cut someone out of their will, or cut them out of a large portion of the estate, doing a binding nomination directly from the fund to the beneficiary keeps it out of the estate, keeps it outside a challenge.
Yes.
So there are certain scenarios where a binding nomination is more important than others, but certainly get some advice on that question as well.
Certainly. I guess we can potentially talk through some of the strategies that you can implement, but one of them is that superannuation that passes to a financial dependent is not taxed, whereas superannuation that passes to a non-financial dependent could potentially be taxed depending on the components of the fund.
Correct.
So that's like in the normal scenario, we would have the nomination going to a spouse because they're automatically dependent.
Yes.
Where there's an individual, often we allocate it to the estate.
Yes.
Do you have comments on that?
You're quite right. If it goes to the estate, it's really a question of where it lands. So if it lands in the hands of a tax dependent, again, it will be tax free. We recommend against lumping superannuation, for example, in a testamentary trust.
Okay.
Because the beneficiaries of a testamentary trust are broader than tax dependents.
Yes.
And so the tax commissioner might look at that category of beneficiary and think, well, hang on, that potentially could go to a non-tax dependent and you might wear the tax.
Yes.
So you've just got to be careful where it lands.
Okay.
If it hits the estate, then you might want to deal specifically with it in the will.
Okay. Excellent.